What is up, guys? This is KOJOFOREX, aka GBP Legend, aka Sniper Trader, aka King of Blues. In today's video, I title it "Why You Should Never Move Your Stop Loss." Right? So yeah, I'm going to be using USD as a practical example of why you should never move your stop loss. Before we get into the video, let's take the intro and come right back. Now, I should tell you guys that in reality, I actually make this mistake once in a while of moving my stop loss, right? I'm going to explain to you a very scenario that allowed me to move my stop loss, which was a trade setup that I took last week, right, for USD and then I give you the practical reason of why I moved my stop loss, but it should be a lesson for you guys, right, so that you guys don't move your stop losses anyhow, right? Nonetheless, I should let you understand that in that trade, I didn't lose that trade though, but I could have lost in that trade though, right? Now with USD last week when I was watching this trade, I had a very legit trade setup, which is something that I teach all my students, right? So yeah, I had a very legit setup on USD which is basically this, supply zone right here, right? Or you can call it a resistance zone, whichever it works. And then I had a very legit setup where I took this trade right here with my stop loss right above the range, expecting the market to come down possibly into these lows, right? And then what happened with this trade? I took a straight loss at this trade. Now, when I took a straight loss at this trade, what I just thought about myself was that I should look into the next possible zone where this market can possibly go, so I look for an opportunity to try and come back again in this market. So again, I marked up my chart and I was looking at this resistance area right here, right? So as a sniper, you know that anytime the market takes us out, we only want to watch the next possible zone that we can come back in the market. After all, we're risking only 1 to 2% of our account, is it? Now with that in place, yeah, I took the L and I'll just patiently wait for the market to come to the next possible area. Let's see what exactly happened in that area as well. Now with this, right, I had my next attempt into this trade right here where I put my stop loss right above the range and then I was targeting these lows, right? So basically what happened with this trade is that it came a little bit into my favor and then what happened? Quickly pushed against me, right? Now, if I still had my stop loss right here, what do you think would have happened? I would have taken the L. This market would have just taken me out and I've taken the loss. But what did I do? I moved my stop loss, which I'm advising you never to do, right? Now, when I moved my stop loss, what was the reasoning behind it? I just surveyed into the whole next area of next possible resistance that this market can be using, right? Remember, guys, that I told you guys support and resistance. It's a price zone, not a price point. So I marked up this area. I'm like, yeah, this is not so far away from my entry point. So if I leave this market right now, I'm just going to take a very unreasonable L, right? And then the market is just going to come back into my favor, right? And under my circumstance, I should have put my stop loss at break even, which is what I advise everybody that takes lessons from me to do. When we take our entry and the market is about 30 to 40 pips in profit, we move our stop loss from where it is, its original point, to break even, right? But because I was busy in the gym, I couldn't get the time to do that. And then I came to meet my trade in the drawdown, right? So yeah, with that logical reasoning in place, I moved my stop loss, right? And then at the same time, I looked at the average pip movement of USD. You must understand that in every currency pair, we have some level of average pip movement before that market will make a retracement. So if you backtest just with what I'm showing you here, you can see that with this move, we had about 170 pips before the market decided to reverse. And then when it reversed, we have about 140 pips. So you can averagely judge that between 170 and 140 pips, this market would make a significant reversal, right? But in this particular market, this market had moved about 260 to 270 pips already. So I was so confident that in the next area of resistance, this market was likely going to reverse. And then there was no point in taking a loss when the market is quite close to a next area of resistance, taking a loss and then watching it reverse. So that's why I removed my stop loss, right? But let's see eventually how this thing unfolded. This market just rejected in that specific area that I denoted and then came all the way back down, right? So I didn't take an L in that market. But when I went on Instagram Live, which I recommend everybody to follow me on Instagram if you haven't done that already, at KOJOFOREX, I explained to my Instagram followers, right? I always come on Instagram Live and explain everything that I do trading wise to them. I explained to them that the only reason why I did that was exactly what I showed you. Nonetheless, it isn't something that I advise any trader to do, and explain exactly why I said that nobody should be fond of removing their stop loss, right? So yeah, in that area right there, for people that were with me on Instagram Live, I put exactly around this area, right? That last stop, what I wrote there was last stop, which meant that any instance of this market trading above this range, I was going to take the L, right? And that would have been me losing about $2,000, right? In fact, when it was around here, I was in a drawdown of $1,200. So moving a little bit pips on the upside, I would have been in a loss of 2,000, and that would have been it. I would have taken the L, and then try to find other trade setups to make that money back, right? But yeah, basically it couldn't get to that last stop and then reverse. But I was back testing other examples that could have been worse using the same principle scenario, right? So yeah, here I was denoting to my people that let's take the same trade example, exactly from using the backtesting tool here and seeing exactly what we want to see, right? That perfect rejection, perfect reversal signals, and then jumping in on this trade here, putting a stop loss here, expecting the market to come down into these lows, right? So yeah, with a very optimistic trader taking this trade and then the market going against them, they may easily say, oh, this market has likely another resistance area to visit, so why not move my stop loss to the next resistance area, right? So you can see, yes, we have some series of resistance here and then another series of resistance here as well, right? So now let's see exactly what happened with this market. So if you're targeting that, yeah, this area could serve as what? A possible resistance to hold the market to come back down, or here even as a possible resistance. Let's see exactly what happened with this market. It kept smashing through all those levels and then kept going up. So that trader could have been in a very messy situation if they just been following the same, adamant principle of the market is going to come down, market is going to come down. And this market kept moving as much as a very huge pip movement of about 350, right? Let's see even overall where it eventually ended up going. So that's a further push on the upside, which would have literally blown your account by now, right? This market kept moving in as much as about 420 pips. So this lesson basically tells you that you should never put a limitation on how far the market can go, right? So if you're very stubborn and then you feel like, okay, I'm going to add more positions, then your end would have come earlier than expected, right? Now, in reality, you may think that, yeah, maybe after this 420 pips, the market came back down at some point, and then, with if somebody that has $1 million account, no matter what, they survive, right? Let's see what happened with this as well, right? So yeah, we had a little bit of retracement, consolidation thing going on here, and then what happened again? Another level of what? A bullish rally on the upside, right? Eventually pushing us further up to the point of what? The market rallying about 500 pips in negative from where we took our original entry, and then from that support area about 590 pip, right? So no matter what, if you keep moving your stop loss, you can be in a very messy situation in this forex market. I hope this little scenario opens your eyes and takes you to a different dimension of understanding never to place limitation on how far the market can go, and then you've learned also why it is very critical that you never move your stop loss, even though sometimes I personally am stubborn to do that once in a while, right? So hope you enjoyed this video. Make sure to smash the like button. Make sure to subscribe to this channel if you haven't done it already. Follow me on all social media platforms at KOJOFOREX. And then lastly, click in the link in the description to join the KOJOFOREX Telegram community, which has close to about 24,000 members. I drop these educational videos in that platform for free. I drop signals for free as well, and then educational content as well, right? So without saying much, I hope you guys enjoy this content. I'm going to see you guys definitely in the next video. Peace out.